Welcome back. The US is in debt, Americans are broke, and the markets are falling. What in the crypto Bitcoin is going on here? Well, in today's video, we're going to be breaking down what is going on in the markets. We are seeing massive drawdowns in stocks, in cryptos, in pretty much assets across the board. And while people are freaking out, I want to put things into context for all of you, why I am still bullish, why I am not necessarily worried about what is going on in the short term and why we're seeing these massive depressed prices. And also, I'm going to give you guys my insight into why I'm not buying the market, at least not right this second. So don't forget to give this video a free thumbs up. We upload almost every single day on this channel to bring you the latest happening in the financial world. If you like this kind of conversation, hit that subscribe button, give the video a thumbs up, and also if you want to help support the channel, click the join button to learn more about becoming a channel member, or leave a super chat down below in the comments. Let's get into it. So as many of you guys probably know, we have seen massive drawdowns in both crypto and stocks, with crypto going from all-time record highs of $105,000, $110,000 down to $78,000, about a 30% drawdown. Ethereum is down. It didn't even hit its all-time record high yet. Solana touching the $100 level, as I predicted. We're probably going to see below $100. And in all of this, people are like, when is the Federal Reserve going to save us? When is everything going to get better? When is the market going to go higher? Well, I'm here to tell you, I don't know that we're going to see any of that happen right now, because we are seeing a lot of uncertainty and a lot of fear because of the tariff situation. The geoeconomic situation is still unsure. Are we going to have retaliatory tariffs? Is it going to be a trade war ongoing? Or are other countries going to say, let's do reciprocal tariffs, and or let's stop tariffs altogether? We're probably going to see a combination of the two. But the bottom line is, the global trade war that we're seeing, not just between the US and other countries, is kind of a geoeconomic picture into what's happening at the macro level, right? Zoom it out all the way. But when we zoom in on crypto, we're seeing massive drawdowns, as we just discussed. Stocks, same thing. Some cryptos are down 80, 90% from their recent highs. Solana is down over 60% from its all-time record high. And so are we going to see the Federal Reserve step in? A lot of people are wondering, well, Federal Reserve, you got to save us. You got to save us. But according to one analysis, the Federal Reserve is unlikely to rescue markets and economy from the tariff turmoil anytime soon. Now, personally, I want you guys to know, my personal opinion on the tariff thing is this is just a narrative. Probably within 3 months, this is going to be forgotten, right? It's either going to be resolved in a very positive way, or it's going to be resolved in a kind of mixed way. But I don't think that this tariff situation is going to hold the markets down forever. No way. There's other factors at play here. And right now, the market is just pricing in the uncertainty. Once there's more certainty, the market's going to price that in. And that brings us to the next part of this video. And this is really to kind of humble us all down a little bit. Because, a lot of times if you're in the crypto world, or you're in the finance world, or you're on crypto Twitter, or on crypto YouTube, or TikTok, or whatever, you get entrenched in this world that everybody is investing, that everybody wants to get rich, that everybody is getting rich. This is one of the big issues why nobody sells the top of the market. Because all they got to do is put one person saying, oh, well, I'm a multimillionaire now from this one coin, but I'm not selling anything. And then everybody else says, I'm not selling either. And then nobody sells, nobody gets rich, and everybody loses, right? But in all of this fun, up and down momentum in the market, it's important to understand who really owns the markets. This is a clip from our own Treasury Secretary, who's basically an ex-hedge fund manager, Scott Bessent. And what he says here is very critical to what is going on in the markets. And also to put it into context, who this drawdown in crypto and stocks is actually affecting. So I want you to listen to this video. I may pause it here and there and discuss. But then we're going to kind of pull it all back and understand what this means for the crypto markets, what this means for you, what this means for your portfolio. Even now, even if we go down another 50% in the markets, I'm not freaking out. Because if you own any assets, whether it's crypto, stocks, combination of the two, and or real estate, you're already ahead of the game. And so let's listen to the Treasury Secretary and hear what he specifically has to say on, where the markets are and kind of his macro standpoint or viewpoint on really some of the serious problems that we're seeing, not just with the crypto markets or the stock markets or the financial markets, but with the people market. What's happening with the people here in the US? Let's listen in.
The distribution of equities across households, the top 10% of Americans own 88% of equities, 88% of the stock market. The next 40% owns 12% of the stock market. The bottom 50 has debt.
So let's go over this number again. Top 10% of Americans own 88% of the stock market. The next 40% own 12% of the stock market. So the top 50% of Americans own the market. That's it. Everybody else has debt. Everybody else has debt. And I want you to think about this. Really, really internalize it. Because even if you're down 50, 60, 70% of your portfolio, stocks, crypto combined, or independent, you're still ahead of 50% of the people in the country because they're in the negative. And even if they hold crypto, right? Those people who never have any money, but they also supposedly own a lot of crypto. They're still in the negative because they have more debt than they have in value in the cryptos or in the stocks. This is really important to think about. And this next part of the video that I'm going to play kind of really explains to you why this is so important to understand that even though we're down 50, 60, 70%, a lot of people don't even own this stuff. And even if they do own it, they don't own a lot of it. It's like the housing market. People are freaking out about the housing market saying, oh my God, my house went down in value by $20,000. It's like, wait, your house wasn't even worth what it was before it came down in valuation, just from your Zestimate or your Redfin estimate, because those are just estimates. You haven't sold the home. Like I've seen homes on the market for literally 2 years now, and they've come down maybe $10,000 in price. And it's like your home is clearly not worth that much, but they're stuck to it is, but it's not, right? Anyway, let's continue listening into Treasury Secretary. And don't forget to give this video a free thumbs up and let me know your comments down below. Like, are you worried about these markets or are you not? Let's listen in.
They have credit card bills, they rent their homes, they have auto loans, and we've got to give them some relief. That I was struck by the statistic from last year.
That's the message right there. Just as a bystander, I'm like, wow, okay.
All right. Or that I like the examples, and I was really struck by two different statistics last year. Summer of 2024, Americans took more European vacations than they had in history. Summer of 2024, more Americans were using food banks than they ever have in history. I went into 2 food banks near my hometown to ask, what's the story? And they said, it really takes, for a lot of people, it's a loss of dignity to walk in a food bank.
Of course.
But they were seeing a new phenomenon, that it wasn't their traditional clientele. It wasn't people who'd lost their homes. It wasn't people out on the street. These were working families who could no longer, $100 at the grocery store, that basket of groceries every week, they were missing 5, 6, 7 things, and they were coming to the food bank to top up. So that's not a great America. Record European vacation, record food banks. And no reason we can't keep the record European vacations going, but we got to take care of these other people.
And for me, this is something that is very important and part of whether you like the president or not. This is one of the things that the president has pushed, that he wants majority of Americans to no longer have to pay income taxes. And one of the ways to do that is through tariffs. Now, if they're actually going to do this or not, I don't know. But they are tackling the debt situation. Granted, a lot of people in this country do not agree how they're doing it or the way that they're doing it or whatever. But at the end of the day, this needs to be fixed. $37 trillion. When I started this channel in 2018, which is many years ago, right? This U.S. national debt was at $19 trillion. And, I had a financial mentor who was talking to me about the debt and basically saying it's never going to get paid off. And I'm like, no, it has to get paid off. It's like, no, it's going to get worse. And we've literally more than doubled in just the time that I've had this channel, the amount of U.S. national debt. And it continues to accelerate. And, people who say, well, we don't have to worry about it right now. We'll just keep putting it off to the next generation. Well, the next generation is here. And like we talked about in other videos, US, number one, needs to produce things. Number two, needs to maintain the dominance of the dollar. And it seems like this administration understands that the dollar needs to be strengthened and strengthened through the reduction of debt and vast reductions of debt, because otherwise this is not going to work. And the majority of Americans are going to be even in a worse position if these things don't get fixed. I'm not saying that they are going to be fixed. I don't know. I'm hoping that they are. And I think everybody should be cheering on the United States, regardless if you like the president or not, like the Treasury Secretary or not, because this is critical for the future of America, right? The finances should be non-political. The finances are the finances, right? The numbers continue to grow, and there's a lot of people who are continuing to, especially as the middle generation is kind of growing up now, and they're becoming the adults in the room, and they don't have any money. They don't have enough money to start a family. They don't have enough money to buy a house or buy their car, and everyone's just in debt. And if something doesn't get fixed now, the next generation, it's going to be even worse. And so this is the big disconnect, I believe, between the baby boomer generation that walks around like, you're not going to cut my Social Security. It's like, wait, you're on two pensions. You're on two pensions and you're worried about your Social Security getting cut. Like, I'm not saying that it should be cut, but I'm like, where's the priorities here, right? When there's a whole nother generation that we're not even going to get Social Security. Or if we do, it's not even going to be anything of value. And so this is why I believe it's critical for this generation to be looking at investments and thinking about retirement now, because 50% of America is in the negative, guys. They're in the negative. So even if your portfolio is down 50, 60, 80, 90%, you're still in the positive. They're in the negative. And it's very hard to get out of the negative, especially when that's your mindset, especially when that's all you know. And so even if they start investing in crypto, there's, crypto can only go up so much when you're getting, 30% interest rate on your credit cards and all your credit cards are maxed out. Like, how do you offset that? I knew somebody a few years back who was about $50,000 in credit card debt. And this person told me how much they were paying a month or a year just in interest. And I was like, what the F? Like, you either have to go bankrupt and wipe it, or you need to make some money and pay that off, because otherwise it just compounds and compounds and compounds and compounds year after year. And it's almost impossible to get out of it. And just the stress of it makes most people just pay the minimum and not think about it, And so I agree with the Treasury Secretary that, although we're feeling a lot of heat in the markets, and we want the Federal Reserve to jump in right away, that may not be the best thing for the medium and longer term. The short term in the markets, yes, it may be bearish, but everything else going on for the markets is really bullish, right? So even though short term bearish, medium and long term extremely, extremely bullish in my view. And the other thing I want to remind people, again, is that if you own these assets, when they go up, what are you doing to give back, right? A lot of these companies, they have charities, they donate. When you're pulling money out of the market and you're in profit, and you can, make sure you guys give back, because there are a lot of people who don't have even the mindset to invest, right? There's just too much in debt. And so hopefully the markets do kind of stabilize out. I believe that they will. I believe there's a very short term downtrend. I mean, I cannot see, no matter what the president says, I cannot see Trump going 3 months with the market going down 5% a day. Like, it's not going to happen. And so, again, the tariff narrative is going to shift, the sentiment will shift. And once we get into bullish territory, that's all we need. That's all we need. Anyway, hopefully you guys enjoyed this kind of breaking news story about the markets in turmoil. I really want to know what you guys think down below about where the markets are. Are you worried about where the markets are? Do you believe in kind of what the Treasury Secretary, the Federal Reserve, the president, like what the direction is and what the kind of conversation is when it comes to the markets? Are you okay with this? Or do you think that we should not be taking any risks in the market and we should just be pushing for lowered interest rates, green market all the time, 100% of the time? Or do you think these kind of downturn times are good? And again, a lot of people are wondering, Cryptoviser, should I buy the dip? Do I not buy the dip? Personally, I'm not buying this dip because we could dip a lot further. And every time I buy the dip, we dip further. And honestly, I'm exhausted. I'm very exhausted from buying dips. Will I buy the rip when we start moving higher? Maybe, maybe not. I don't know. But at this point, I'm kind of sitting on the sidelines and just waiting to see what happens, waiting for those signals from the geoeconomic environment, geopolitical environment to give signals as to when is the time to start investing. Like if the Federal Reserve came out tomorrow and said we're going to do an emergency rate cut, maybe that would be the time to start buying it. Maybe wait a little bit after that. I don't know. Because there's just so much going on all at once. You guys have seen that movie, Everything, Everywhere, All at Once. Incredible movie. Like it literally takes you on a journey and you're like, what the hell am I even watching? But anyway, that's literally what's happening in the markets. Everything, everywhere, all at once in these markets. And it's quite exhausting. It really is. But I think this dip is basically loading a major rip, because whenever there's volatility in the markets, to me, that indicates market rotation. And when we see a market rotation, typically we have a lot of moves up, down, and harsh moves before we get those mega banana zone rally moves to the upside. And that's what we're all waiting for. But when is it coming? I don't know. Let me know down below in the comments. I'll see you guys on the next video. Crypto on.